Welcome back. Well, we have another company on the radar and another guest with us in the studios. Girish Kousgi, MD and CEO of PNB Hsg Finance, is here with us to talk about the company's business outlook. Mr. Kousgi, thank you so much for joining in and being with us here in the studios. Really appreciate it. So let's start with the growth trends, because there's been a lot of buzz around the PMAY 2.0. In the last quarter, the first quarter, I think the AUM growth was about 7% if I look at it year on year. So given that we have the new format of the Pradhan Mantri Awas Yojana, what does that mean for business and what kind of growth will you look at this year?
Good morning. Thanks for having me here. I think since last 2 years, our focus has been on retail. So we should talk about retail growth. Last year, the retail growth was 14.1% amidst so many challenges. Now we are behind all of those challenges. And this year, the guidance on retail growth is 17%. Corporate book, which was 18,000 crores, now it is down to 1,800 crores. So if you look at overall book, corporate degrowth also would impact the growth, and therefore 7 is not the one what we should be tracking. We should be tracking 14.1 last year retail growth. This year it's going to be 17%. With PMAY, I think big announcements are made. 10 lakh crore investment in housing, and PMAY, if you look at last 2 terms, the total amount spent was 1,65,000 crores, even though the allocation was 2 lakh crore. And this time, that amount itself for one term is 2,30,000 crores. So it's going to be big. We are waiting for the final details. I think PMAY is going to be big. It's going to help us on 3 counts. One, in terms of showing better growth. Number 2, it's going to, we expect that it's going to improve the margin. And number 3, the cost is going to reduce.
All right. Hi, Mr. Kousgi, and welcome to the studio. Good to have you here. Tell us about your NIMs then. I think it's holding around the 3.5, 3.6% odd. How is the cost of borrowing shaping up? From NHB, what is your current mix, current amount of money you're getting from them? And how does that change going ahead? What does it mean for your NIMs from here on?
So I think we have guided a NIM of 3.5%. So I think for last few quarters, we are holding at about 3.65. So we will see NIM for next 2 to 3 quarters, it will be at the same level.
Okay.
And after that, it will start slowly inching up. The reason is that we are changing segments within retail. We are moving towards more higher yielding segments like affordable and emerging. Affordable, we started 2 years back. Now the book is over 2,500 crores. It comes at a higher yield and therefore better margins. Emerging vertical, we started this year.
Okay.
So after 3 quarters, NIMs will start inching up. Till 3 quarters, we'll be able to maintain at the current level, number 1.
Okay.
Number 2, in terms of NHB, because of our improved financial performance, we had access to funds last year, 3,000 crores. Obviously, this year we're expecting a higher allocation from NHB. And today, if you look at our entire liability book, NHB is about 8.5%,
okay.
And this will go.
Give us a couple of numbers then. You said affordable and emerging, both of them are the focus areas, right? Which gives you better yield. Affordable, you said, I think it's around 2,500 odd. Where do you see this number head, say, in the next 3-4 years from here on? You must be having a target. And an emerging segment as well. What is it and where is it headed?
Okay. On affordable, our plan is to get to close to 5,000 crores this year end.
Okay.
And by FY27, affordable book is going to go to 15,000 crores.
Okay.
So now it is 2,500,
5,000.
Year end 5,000, FY27, 15,000 crores. That's our plan. On the emerging, the book will be 25,000 crores by FY27. Today, the book is around 12,000 crores.
Okay.
And if you look at Q1, almost about 33% of the incremental sourcing came from affordable and emerging. These two would come at a higher yield. The plan is to take it to 40 to 42% by this year end.
Okay. By this year end, so affordable and emerging segments will be 40 to 45% of your book.
40 to 42.
42% by the end of this year.
What is the number for emerging, sir, you said, by 27?
25,000 crores.
25,000.
So the plan is that by FY27, the retail book is going to be 1 lakh crore. Out of 1 lakh crore, affordable will be 15,000 crores, emerging will be 25,000 crores, and the balance 60,000 crores will be prime.
Got it. Now, just to press you on the margins a little bit, cost of funds are moving up, right, across the board?
Yeah.
Where are we at? I mean, is it, are we in the initial stages where, and we will see upward pressure? Because, bank credit itself is going to be lower this year as compared to last year. So obviously, I mean, the pool of your funding, I mean, I'm not talking about you as such, but NBFCs, and 60-65% comes from banks. So that also, there's lesser water in the lake in that sense. You'd agree with that?
See, if you look at, let's say about year and a half back, I think market borrowings, when I say market borrowings, I'm talking about CP and NCDs, were at a slightly higher rate. Now that has eased out. So NCD the rates have dropped. CP is very attractive, right? And if you look at a bank loan, it's about 40%. So in last 5 quarters, if you see at the industry level, housing finance companies, the cost has gone up by 170 bips. For us, it has gone up by 92 bips. And we have been able to kind of maintain. Today, our cost of borrowing is 7.92%, and incremental is 7.75. So there won't be much of increase from now. We'll be able to maintain this. That is because the company is doing well. We have access to multiple sources of funds. NHB is one, CP, NCD, right? And also in Q4 of last year and Q1 of this year, we got a rating upgrade from all the 4 agencies, CRISIL, ICRA, CARE and India Ratings. So all of these things have helped PNB Housing. But the point is, yes, the cost is inching up, and bank credit may not be a challenge. The cost of bank rate could be a challenge, I think, for the industry.
But you're maintaining your NIM guidance at 3.65.
Our guidance is 3.5, so we'll be around 3.5 plus, for next 3 quarters.
How much of your book, sir, is fixed and how much of it is floating?
On the entire
I'm asking you this because, we are bracing for rate cuts, so, that could have an impact as well. So how do you see that panning out?
See, our almost about 100% is floating.
Oh.
So it's not fixed. I think this would be true for, I think, most of the companies. No, for us, you're right. So for us, when there is a rate cut, obviously it impacts the entire industry, but it's only a lag effect because your assets are completely floating, whereas your liabilities will have a mix of floating and fixed, right? And therefore, there'll be a lag in terms of managing this piece. You have to reprice your assets much faster than your liability, getting repriced.
Yeah.
So this gap is there. For us, there are few things. One, because of rating upgrade, we will be able to get loans at a better rates from all the sources, number one. Number two, we are very slowly increasing our share in high yielding segments.
Yes.
Number three, we are going to start corporate finance in next few months. So all of these things are going to help us. So for us, the pain could be there, but could be much lower during that lag period.
Just to go back to the point, since retail is such a big focus, and you said that 1 lakh crore would be the size of the book by FY27.
Yeah.
FY27. Now, in this piece, to go back to the central government scheme, what is the role of PMAY? Because we were getting feedback from some analysts as well, and they were pointing out that the 2.0 version is actually not that beneficial because it's tweaked some definitions, and I think now the middle income segment definition has come down to 9 lakhs, etc. So what is the exposure that you have to PMAY 1.0, and do you expect any incremental benefit from the second version of the scheme?
See, in last 2 terms, we had disbursed 62,000 customers.
Okay.
Amount was about 13,000 crores.
Okay.
Right now, in this PMAY 2, they have tweaked the income levels. I can understand the loan ticket size, all of those things. There has been a tweak. That is to only ensure that the benefit really goes to EWS and LIG. Now, most of the companies which are focusing on affordable and emerging will tend to gain.
Right.
As I mentioned to you, I think the scheme details are still not out, but we expect that it's going to help on 3 counts: 1 in terms of growth, 2 in terms of cost, 3 in terms of margins.
So as a percentage of your book, you said the disbursement amount was 13,000 crores, right?
Yeah.
In the first scheme.
First 2.
In the first 2. So what is it as a percentage of the book now, and how much do you expect it to grow up to? Since you're expecting it to be beneficial?
I would be able to answer this question once we know the scheme details, because we know it's going to be big. We are still awaiting for the finer details. But definitely one thing I can tell you, it is going to be really big, because the allocation is such that it has to be big, and there is more focus this time on PMAY.
And credit costs will be virtually 0, right, for the year?
The credit cost for this year, we have guided 25 bips.
25 bips.
But we also have a right back opportunity both from retail and corporate. So
that's
yeah.
Absolutely. Thank you very much, sir, and thank you for dropping by to our studios. Good
Thank
luck
you.
to you, to your
Thank
team
you.
as you continue to execute well over the next many quarters.